the company today is trading at something like, call it 125 times this year's earnings,
Mhm.
depending on what your estimate is. Now, the reason that it's trading at that multiple is because people expect that Tesla is going to produce attractive growth in the future. That's the only reason you would pay that much for Tesla today. And a lot of people spend all kinds of time arguing that, oh, that's too much. It should only be, 70 or it should only be 50 or whatever number they want to pick. But if you're looking out at what Tesla's earnings power is over 5 years, and then saying, at that point, I think Tesla's going to trade for a PE of like 50, then you would expect the 125 today to step down over time in order to get to the 50. Right. So I do expect that Tesla's valuation will step down from where it is now to a more reasonable number at the end of 2029.
Mhm.
Now, if you do that, then you end up with this projection of the market cap over time. So today, as we stand today, I believe that Tesla's market cap is around 800 billion. Right. And if I apply those PEs that we just showed on the previous page to the earnings numbers that the model produces each quarter, then here is the expected market cap of Tesla over time over each quarter for the next 5 years. Now, this excludes the fact that Wall Street typically would be forward looking. If they suddenly expect that 2026 is going to be epic, the PE multiple actually may go up
Mm.
now to adjust for that. So this does not include that. So if you're just looking at this and you say, okay, we're at 800 now, and a year from now, this model is saying we're going to be at 1.8 trillion. That's helpful. That's based on earnings and the step down in PE that I had in the previous chart.
Mm.
Okay. Now, I wouldn't say that these are any kind of price targets for Tesla, but at least I think it gives you some idea of how the valuation may step up over time. And you can see there's an inflection point here, right, in 2027, where you really start to get an acceleration
It's crazy.
in the valuation
Look,
based on
we
earnings.
might double by next year, but then these are going to be tiny numbers by 2 years from now, 27,
Yeah.
28. You'll 10x by 27.
Yeah. Now, so that's all great, right? You can see some projections here for some crazy market values, 48 trillion and, by Q4 2029. That remains to be seen. We don't know for sure, but again, if this is your expectation for profits, then to me it's entirely reasonable that we get to a valuation like that at that point in time. Now, a lot of people say, well, there isn't enough, today's market cap of the S&P is not even close to that, or whatever the answer is, right? You've the largest company today is 3 trillion.
Mhm.
That is not any kind of limiting factor. Years ago, we used to think of $100 billion company as being incredibly massive, and today that's not that big. So the fact that this number is so high is really not. There's no limiting factor around that. If the company is producing that kind of earnings power, then you could easily justify this kind of valuation. Okay. Now, let's go back to this concept of hindsight PE. Forget the fact that the company might trade at 48 trillion in 2029. Forget that for a second. Let's just focus on earnings. If we believe that in Q4 of 2029 that the annualized earnings of Tesla approach $1 trillion, and that's the output from the model, how much are we paying today for that earnings? It's less than one.
Mm.
If today's market value is 800 billion and the company has earnings power in 5 years of close to a trillion,
Mhm.
you're paying less than one time's earnings for that. And again, I'm calling this hindsight PE because if we're fast forwarding 5 years in time and we see Tesla making a trillion, then today we're paying less than one times for that.